you used to get fined if you had a fight, or if you put your hands on somebody, but you could also prepay them. So if you knew you were going to have it, you just paid the fine before you did it.
I want to take advantage of your experience, gents, and your, shall we say, your wisdom. Nick, just coming to you briefly, I think for a lot of our audience are going to be a bit younger and they've only ever known sort of electronic sort of computer trading. Yeah. What were the trading pits like then? Were they similar to how you see on the films or how you see on sort of like stock footage and things like that? I think what's quite interesting for me, and I imagine many other people, is this idea that you can read people and sort of, like you say, look at the body language, probably see all the stresses and things like that. And I imagine that's quite a different skill set that you required at the time. Tell me a bit more about that.
Yeah, look, it's all very visual. I mean, everything is done with hand signals. You can see the orders coming into the market, so you can see who's active. Everybody, as Andrew's got a jacket on there, everybody would have different jackets, so you could actually identify who Goldman Sachs were, who JP Morgan and the like were. So it could be aggressive at times. People, obviously everybody's competing for the same orders. You'd have people in there who were just trying to scalp. So you'd be in and out of the trades very, very quickly. But for me, it was the visual aspect of it. So when I'm looking at the markets now, especially around the opening bell, I'm looking for some of those orders to trigger, some of the programs to trigger. The DAX opens and it can be open for 90 seconds, and then you tend to see a bit of a buy order coming into the market. So it's the algos, it's the trading, the trading boxes that you see that are out there. And it's my belief when I'm looking at these that you can start to see patterns forming within that, and that people are inherently lazy and they don't really change the way that the programs are trading. And if you can identify them, you can try, you piggyback them. If you expect the buy order to trigger after 90 seconds, try and take advantage of that. So trying to use visual cues that I would have been looking for 25, 30 years ago, and trying to work out how I can encapsulate those in the markets now. Because for me, my approach is about keeping it as simple as possible, making it as easy for me, making sure that I have a life outside of the trading screens as well, and that I've got plenty of time to spend with family and doing other things. Because you can, it's very easy to get completely immersed in everything that's going on in the trading screens and forget about everything else. So I think that variety is important as well.
Yeah, I agree with you. I think trading's one of those unusual occupations where, or pastimes, whatever you want to call it, where sometimes less is more, and we're not used to doing that. In most walks of life, we're programmed that more is more, and sometimes just making a handful of high quality decisions and just leaving things alone is the best thing to do. And it takes, I think, new traders quite some time in order to get used to that. Andrew, can you tell me a little bit about your experience on the pits then as well? Because again, I think it's a very fascinating subject that people are interested in, because it's just something that just doesn't exist anymore. I mean, you spoke about how you found it quite challenging in order to transfer from the pits onto electronic trading, and I've heard that story sort of many times. And also, just to bolt on and expand on that, has sort of trading changed since the volume's become so algorithmic, so automated as well?
Yeah, just on that first note you mentioned there about the time at the screens, we are bred to believe that the more hours you put into your working day, the more money you should get paid. And obviously that, I think, is one of the biggest challenges. I totally agree. People think that they need to be trading all the time. They've told their spouse, I'm a trader now, I've given up my real job, I'm now a trader, so they feel they've got to be trading. That's the biggest downfall, I think, and killer of most traders. And that's a big advice I say to all my students. Just while I am talking, before I get on to the talking about the pits, I've just taken a long trade in. I don't want to be a wuss. I don't want to be. I can't face Nick after this because I haven't
been bullied into it.
Right. So this is what I've done basically. I'm using a technique that basically inspired me to trade the Forex markets all those years ago, and that's basically buying strength over weakness. I'm looking here at this little indicator that I always use. Everyone in my trading community knows about it. It's basically my bread and butter of everything I do. It's basically telling me where the money is flowing at this moment in time. I can tell you at the moment in time, we've got some CAD weakness. The CAD is coming down. The pound is going up. So I've basically taken a trade to benefit from that. So I've basically taken a long pound CAD trade on a short time frame. with stops in place. So that's basically what I've done at the moment. We are seeing a bit, we're seeing a bit of a like a 4 hour. These are 1 hour candles. We've had a lot of indecision. We've hit this new low. That's a bullish pattern. Having taken out of that low, that's indicating that potentially there's a little bit of reversal coming in here as well. I'm also looking at the higher time frame charts as well, where we're seeing a support level respected and tested. Trading pits, exactly as Nick said, it was very, very different. I spent a lot of time working. This is Swiss Bank. The other jacket's up there. That was Warburg's. The red jacket there was when I was a local trader. That's basically when you're trading your own money. Now, we had some really big locals in there. Locals basically means you put your own money up into the account and you're trading your own account. Whatever you make is yours. Whatever you lose is your loss. I spent about 2 years doing that. And I was really quite a small trader local. You know, we had all the big players trading 50 lots and 20 lots. And I'm a small local. I was trading 5 lots, 10 lots. Everything's down on hand signals and so forth. But my technique, as Nick alluded to earlier about JP Morgan's, if JP Morgan's are coming in, Goldman Sachs are coming in, and he's a buyer, or the bloke behind you from Salomon says, I'm about to buy, I'm not going to stand in their way, with my little 5 lots. So that was my trading style. And I used to look at people's eyes. That was the technique that I used to use, looking at people's eyes. If the Goldman Sachs broker came in and all he was doing was looking at the people with their hands out, you just sort of like, you can see him mentally counting them up, how many he can knock up, get out. You've got a good indication that Goldman Sachs is about to be a big seller. Well, if I'm selling my 5 lots in front, that's my money for the day. So the techniques that we used in those days, very, very different. And that's why I think I lost a lot of money when I came into the screens in 2005, because, that had gone. I was a trader, but it had gone. That ability to feel the market or see the market or just get on the right side of a trend or big move had gone. One of the reasons why I developed that momentum meter. Now, there are momentum meters out there now, but I had this coded 15 years ago, before, as EAs were just about to be sort of hitting the scene. That gave me the edge, and that's what I use today. Another thing I noticed in the pits, which I thought was, looking back on it, was one of the biggest sort of almost money spinners, was the noise. Okay, so when the markets were trending, now you just see the candles going up, and you think, oh, there's a big bullish candle or bearish candle. In the trading pits, it used to be the noise, the crescendo of everyone shouting and scrambling to buy or to cover their shorts and so forth. So there used to be a sort of like a big sort of increase in noise. Often, what I found was that when that noise dissipated, and all basically the orders were filled, and the noise would start to level off. That was often the case where the markets would then have its reversal. I don't know where we have reversals now, MACD crossovers and stochastics and what have you. Well, I don't follow all that stuff. I use basically, exactly. I mean, so I basically use the price action again, waiting for that noise to stop, looking for those big levels for the turning point, and I see those in candles. So very, very different, but we have to adapt, and I think we always have to adapt. And
there's a question on there at the moment, Andrew. It says to both of us: did tempers get out of control and people get into fights in the pits? And you'll probably know who I'm referring to, and his name won't be mentioned today. He used to get fined if you had a fight, or if you put your hands on somebody. But you could also prepay them. So if you knew you were going to have it, you just paid the fine before you did it. So
that reminds me of a good story. I remember a guy in the UK government bond pit was basically having a pop at another trader, and the official who's there, sort of like the policeman, basically can dish out these fines. And I think the fine was like £1,000 or something like that, or $1,500 or $1,200 now. And the official was saying, you go like that, that's 1,000, 1,000 fine. And he kept on doing it, 1,000, that, and the guy, the official was going 1,000, 1,000, 1,000, 1,000, 1,000. Got up to about 10,000. The guy just opened his pocket, chucked his wallet down, goes, "There you go," and walks out. He's not able to pay his fine. I mean, it was amazing. Yeah, I think the answer is to that. Yeah, there were tempers flying. There's a lot of money at stake. I mean, a lot of money at stake.
Especially when you're a local as well. You know, you're not trading for a firm. It's
your bread and
money,
butter, isn't it? I mean, it's your you have a bad
absolutely.
day. I mean, it's your bread and butter. Yeah. This market is really dead, Nick. I mean, even you can't make money out of this.
No, I'm losing.
I'm
I'm back to form and losing money, unfortunately, at the moment. So I better keep my.
I'm not moving at all. Nothing's going on here. What's the DAX doing?
Well, that sounds like a